Hi traders, welcome to my video on the trend reversal indicator. In this video I'm going to show you a simple strategy that you can use to capture moves like this one for over 400 pips, this one for almost 400 pips, and this one for over 400 pips as well. So this is, as I said, the trend reversal indicator. I'm using the MT4 trading platform. You can use this indicator on any platform. You just need to find it, download it, and place it on your charts. This is an Australian dollar, US dollar 4-hour chart. You can use this strategy on any trading instrument and any chart time frame. So you can trade Forex, stocks, commodities, cryptos, indices, etc. And anything from the 1 minute time frame to the monthly time frame. That being said, I prefer to trade the 1-hour charts and above. So the 1 hour, 4-hour, daily, weekly, monthly, simply because they contain more price data, and therefore I find signals tend to be more reliable. That applies not just to technical indicators such as this one, but also price action analysis, support, resistance, trend lines, etc., which are all a big part of my trading strategy. So this is the, and also with higher chart time frames, you can capture big moves without needing to chart watch all day long. So I'd much rather capture moves like these for over 400 pips than trying to scalp 5 to 10 pips all day long on a 1 minute, 5 minute chart. You just end up, paying your broker spread commissions, getting slipped out of trades, and just stressing yourself out for no reason. So the trend reversal indicator you see here below the chart is basically simple to interpretate. Okay, when the red line is above the blue line is above the blue line is below the red, it suggests a downtrend. You can see here. You can see the blue below the red. This blue line here. Let me just make it larger. So you see the blue line. When the blue is below the red, it suggests a downwards move, and when the blue is above, it suggests an upwards move. Okay, so that's the first thing to determine. I wouldn't take a crossover signal as is. Okay, I'm not just going to buy every time it crosses above or sell every time it crosses below. You can see in a consolidated market like this one, if you buy here, it's not the ideal place to buy. And if you sell on the crossover there, it's not the ideal place to sell. Granted, you will capture some big moves early that way, but I much prefer to time the entry. So how to time the entry? Well, this is how I would do it. First of all, I'm going to draw my support or resistance. So I have the support there, resistance there. We can see the market has made this high. This is a strong resistance level. Okay, it's almost a triple top formation because it's been tested at least 3 times. Market is making lower highs. We are on the 4-hour chart, so we know this is a strong level of resistance. In fact, I would go as far to say as I'd probably want to draw my trend line in there more. Okay, you can see the market making these higher lows, but also making these lower highs here. We have a wedge formation, okay, a bit of consolidation here, and then this breakout here, 3 inside down candlestick formation as well. And then we have a breakout there. You can see that this level of support is then breached, becomes resistance, and we have a nice continuation. And then what we do is we look for the trend reversal indicator, because this is our uptrend. We're looking for the reversal. We have our reversal here on the crossover. Okay, so as I said, I wouldn't necessarily jump in straight away, especially not, drawing this move or at the bottom of the move. I'd want to wait for a pullback. So this is the pullback there. So the start of the trend, okay, pullback, and I just draw my support level. Okay, just draw your support here, and then trade on a breakout there of that support. And then we're in this trend at an ideal opportunity. This would have been an aggressive trade up here. You can see the market trend reversal indicator hadn't even changed over. Nonetheless, you could have taken that as a aggressive trade based on the triple top formation. It's basically resistance tested 3 times in a breakout of the support within that resistance. Okay, that would have been the aggressive trade. You could have just waited for the trend to form and then entered on the pullback. And then we see here the lower highs the market is making. Lots of bearish candlestick patterns. Another 3 inside down candlestick pattern there. Okay, and a big breakout of this line. You can see from that breakout candle, traders were watching. I'll zoom in a few. Traders were watching this level here. Okay, there's no coincidence. There's that big breakout bar and a continuation. And we're in the trend there. So potential of, over 350 odd pips. Of course, not everyone's going to exit there. Okay, but we can maximize the move as much as possible by, first I'd place a stop loss above the high here. Okay, so above a recent high. And then as price drops, I'd move the stop loss to break even at the first instance. Then perhaps after this drop down here, I'd move the stop loss above this high. And after a pullback and continuation, I'll just move the stop loss above the high, and just try and lock in as much profit as possible. So if price does eventually turn around, we see some consolidation, we want to just manually exit part, if not all of the position. We've captured as many pips as possible on each move. That way, if we do have a stop loss, 20 pips here, 20 pips there, it doesn't matter, because we know when we do eventually capture a good trend like this one for hundreds of pips, we can make that back and some more. Okay, just to emphasize the importance of money management. Another exit you can use is the crossover of the trend reversal indicator in the opposite direction as well. Okay, what I wouldn't want to do is I wouldn't have my stop loss up here. What would that be? So around 20 pips, which is a tight stop loss for the 4-hour time frame, and then have, price go 60 pips here, get excited and exit the position for 60 pips, thinking it was a great trade, when in theory you've left 300 pips on the table. You can of course re-enter, but the more times you re-enter, the higher the chances are that you're going to get it wrong, and eventually you might end up just selling low. You want to enter as early as possible, sell high and buy low. If you did miss this entry, perhaps after that pullback there, you could get in on this breakout here. Okay, again, 4-hour chart, so plenty of price data within there. You actually have a inverted hammer pattern there as well. And again, the market making lower highs, wedge formation, breakout to the downside. Another pullback here. Okay, so this would have been slightly later on in the trend, but still, you can see the trend reversal indicator is still showing we are in a sell trend. Again, have good money management, limit losses, and let winning trades run. That's what I like to do. Avoid negative trading motion such as fear, anger, greed. Don't revenge trade. Don't FOMO, get fear of missing out, and don't force trades that aren't there. Don't overtrade. So then what happens after this trend? We look for the trend reversal. We can use the indicator to do that. So we get our level of support. Okay, the market starts to make these higher lows, so we know we're in an uptrend. And in terms of entry in this instance, what I'd probably do is I just see we have a nice level of resistance here, and as soon as this is breached, that resistance then becomes support. Okay, you see that resistance here, market starts to move upwards, that resistance is breached. Okay, that would have been in the aggressive entry, but we can wait for a pullback and use the resistance as then just to see how it holds up as support, and it does almost perfectly there around here as well. So on this pullback here, we could have looked to have entered, and as you see, there's lots of bullish price action as well, so you can enter there. And then the trend reversal indicator has crossed over, so again, we don't take the cross straight away. If you do that, you would have bought at the top of this move, so you can just wait for the pullback, keep an eye on resistance, and then enter into this new trend by timing your entry. Okay, so you can enter on the pullback there. Alternatively, you can wait for the trend to play out and sort of form more, and then wait for another pullback and just enter on the next breakout. As you can see there, reliable on the 4-hour chart time frame, because there's plenty of price data within this area here, and a big breakout candle. Obviously, traders are watching these levels and expecting this to happen. Okay, let's just say you took this conservative entry. Stop loss could have been below the low there, so around 20 pips. Again, relatively tight for the 4-hour chart time frame, and almost 200 pips profit potential. Not a bad trade at all. Could have used a trailing stop. Okay, even if we were taken out, if we moved our trailing stop here, still would have been a good trade, or we could have ended up trailing here and been out to capture the majority of the move. When you see the price consolidation or it starts to make lower highs, you can look to exit manually as well. You can also close part of the position. For example, when you move price the stop loss to break even, you might want to close a quarter or half of the trade and let the rest play out. And same with your trailing stop, just depends on your own risk preferences. And you can exit again when there's a trend reversal in the opposite direction. So talking of that, we can look for taking a short trade. So what happens, we see the lower highs. Okay, you see this nice level of support, big breakout there to the downside, price has crossed over. So you could have taken this breakout as an aggressive entry. You could have waited for the pullback. Okay, and then after the pullback, a breakout there of that support line. As you can see, this isn't the ideal trade, but this happens, you know, not every trade is going to capture massive moves for hundreds of pips. We've got to be realistic about it. But with some clever money management, we could, worst case scenario, be taking out a break even. But this trade would have still been, you know, there's still almost 150 pips potential there. We probably would have exited manually once we either seen this crosshair or all this consolidation, a strong level of support. We might have wanted to exit manually there. Okay, then as price continues up, again, we can get in on the reversal on the other side. You don't have to take every single trend if you don't want to. Okay, you can watch how they play out, and maybe after this drop down and this pullback, you would have been looking at this as more of a consolidation situation rather than a trend. Okay, it's not as clear as perhaps this trend here, how that played out. Okay, so then support is formed, nice move upwards, we get our pullback. Interestingly, again, this level of resistance then becomes support, crossover there, and a nice breakout trade there. Okay, trend reversal indicator confirms. Stop loss below the low, around 30 pips, not bad, and over 200 pips profit potential on that. Again, trailing stop, break even, close part of the position if you wish. Not every trend is going to be as cut and dry. Okay. Again, if you don't get in at the first opportunity, you can wait for a pullback. Perhaps here, you can see that's a decent pullback down there and then a breakout to the upside. Probably around here, I'm starting to look more consolidation, and definitely after a deep pullback like that, I'm going to probably sit on my hands on this particular trend if we're not in early, just because it's not as good a trend with all this consolidation, choppiness, a bit of uncertainty. Leads us on to the next opportunity. So the trend reversal crosses again, exactly the same. Okay, so you've got your trend line there. Okay, resistance, that's wedge formation, breakout of the trend line, no coincidence. That support then becomes resistance. Market's making lower highs, so we're going to look to sell. Okay, wait for the pullback there. Pullback like clockwork, big breakout candle, support comes resistance, and again, excellent trade there. Stop loss above the high, so around 20 pips, and over 400 plus pips profit potential in that particular trade. Using a trailing stop above the highs all the way down just to lock in as much profit as possible. Once we get a good trade, we want to make the most of it. Okay. That way we can afford, as I said, to take some losing trades, knowing that overall we'll be up because we're riding trends when we catch them. If you miss the initial entry, another pullback, and no coincidence, big breakout candle. Trend reversal indicator showing us it's a shorting opportunity. Another pullback, support becomes resistance, bearish candlestick patterns. Even here, pullback, breakout, that support then becomes resistance. So you can see, you know, plays like clockwork, reliable signals on the 4-hour chart time frame, but you do need to time your entry. Don't just be taking these willy-nilly and blindly on the crosses. And obviously in, like, you know, scenarios like this is just a bit choppy and a bit messy. You're going to want to wait for a clear trend formation. You don't want to really buy and sell in a situation like this. Okay, so with so many instruments to trade, you know, you can pick and choose your trades. Look to enter in the direction of the trend and time your entry. Good money management, good trading discipline, and you can create a winning trading strategy. Hopefully you found this video useful. If you could like and subscribe, that'd be great and really help the channel. And I hope to catch you on the next one. Take care.